What's up, everybody? We're live. Welcome to another midweek recap. So I'm just going to really quickly check to make sure we have audio, make sure we're all good to go. Quickly check, make sure. Okay, we are. We have about 15 people in the chat. So thanks again for joining. So we're going to go through a lot of detail today. And as always, we're going to start with the futures market. But before we get started, so hi, Todd. Why don't you guys let me know where you're watching from today? I'm always interested to know where my viewers are at. So while I get the futures chart set up, let me know where you guys are from. Hi, L North. Welcome. Okay, and we're gonna go through the whole process again together. We'll talk about everything today. Every single thing we're gonna talk about today. Absolutely everything. Toronto, Minnesota, Wisconsin, North Carolina, good stuff. Colorado, Georgia, perfect. That's good stuff, guys. Chico, California, nice. I'm not familiar with a lot of these places, but I will be traveling a lot in the U.S., so I'm actually looking forward to it. Hill Country, Texas, outside of Fredericksburg, 45 miles from San Antonio West. Awesome. Detroit. Awesome, man. That's great. You know, what I'm going through here, guys, what I'm sharing, always, make sure that you share with the people in your community, your friends and your family, and help others take control of their financial life and their financial situation. Most of the biggest issues in families and relationships and stuff are actually financial. So if you can solve that issue, that goes a long way. So help those that you can. Okay. All right. So welcome again. So we're going to start off with futures, and we're going to talk about, let's start from the beginning of the week, and let's talk about everything that's happened so far and then what I was expecting, etc. Okay. So let us start with the Sunday open. Okay. So the Sunday open is the 14th, I believe, right? It's the 14th. Let me just double check my dates, guys. Yes, the 14th, okay? And then we're gonna go to the 18 bar. So the 18 bar means 6 o'clock, okay? So let's talk about everything that's happened so far and what we're expecting, okay? So we first opened on the 18th, and we were opening inside of last week's range, okay? We're opening inside of last week's range, and then we were thinking about, well, the previous week's range is, the high is right here, up above us. So it's going to be a little bit difficult to just break right through. And as you can see, guys, here, you notice when we poke through the previous week's high, we sold off pretty hard. This is the concept of a false breakout, right? But now we've completely cleared that level. So definitely everything's pointing to the bulls being in control. So let's start off first with the first Fibonacci leg, and then let's talk about the second, and then let's continue looking at sequence legs, and then we're going to talk about SPY and talk about some day trading opportunities. Okay. So when we opened here on the 18, which is 6 o'clock on Sunday, we formed this double top, and then we pulled back right here. So if I'm looking at this, just from looking at it without using any fibs, this is about a 618 retracement. So let's draw the Fibonacci together, right? So we're going to take it from swing low to swing high. Okay. I'm going to pull it up here. So a little bit deeper than the 618. And then I'm going to just get rid of this here. I have this on here. Okay. So we had the first leg. Okay. And we discussed this one in detail the last time we met, right? So we had the first leg here. So let's draw it together. Here's the arrow. Here's the pullback. Okay. And then we're trading to what? The 50% extension. So very beautiful Fibonacci textbook play. All right. So this is also why we had selling around 70s, because the algos have traded to the extension. So any algorithm buying on this first leg has already dumped their position for profits. And that's also a reason why we have selling here. So now the question is, what's next? So if you guys looked at the pre-market plan, I drew the next Fibonacci leg for you guys today. So I hope some of you followed along because this produced a very, very beautiful winner today. Okay. So now we had the first leg. Now we're going to draw the second leg. So the second leg starts from here now. Okay. And we're going to pull it up to the high. And look at this, right on the 786. Right? Look how beautiful this is. This is why I want to teach you guys. This is why I want to teach you guys. Okay. So the first thing we did is we pulled to the 50. We popped. How many points did we pop from the 50? So about almost 20 points. So that's a good scalp right there, guys. That's good, easy money right there. And then when we come back down to the 786, we had a huge 48-point move. And this was given in the pre-market plan today, guys. All right. So for those that have my book, you know that there's multiple styles of taking these fibs, right? You can use the candlestick pattern right here. Like, for example, you have the candlestick patterns, right? You can see that we have a doji on the 786, or you can use limit orders at the different levels. Okay. And I talk more about that in my book. So I just want to show you guys the power of the Fibonacci. So look how the algorithms buy at these levels. Even if it doesn't become a huge winner, you still see something that there is movement, and you can go and make a lot of money just on these little movements. These are high probability movements. Okay. So question from Joe. How long do you leave a gap fill limit order open when price does not come down low enough to trigger your limit order? A gap fill limit order. If it's day trading, then no orders will be outside of 1 o'clock, right? That's my rule. So if you're day trading it, you can leave the order open until 1 o'clock. All right. So does that make sense so far with the fibs, guys? Very, very simple. So a lot of you are returning here, and we go through this every single week. So is it starting to make sense? Okay, let me draw it again. First leg, okay, traded to the extension at the 50% extension. Algorithms dumped. Then now we have the new leg. So the new leg, we have to use the previous pullback. The previous pullback becomes the next leg. And this is what I call sequencing in my book. This concept is called sequencing, one leg to another leg. Okay. So let me know, guys, if you're okay here with these fibs. And what's looking to happen next is we have all of these targets above. Okay. So the current 786 Fibonacci is trading, and we have all of these targets above. We have 39.86, we have 39.9250, we have 39.9925. In this area here, there's going to be some type of resistance because the algorithms who purchased down here are going to be dumping for about 100 points gain. Okay, they're going to be dumping for about 100 points. This also lines up with the 4,000 level. So this is going to be a major area where we'll likely see some resistance. So that's pretty much what we're looking for next. All right. How can I get your book? The link in description appears to be broken. Yeah, I don't know. Every time I post these links, they keep breaking. It's pretty dumb. But let me just quickly show you guys for those interested. So just go here, tradingwars.com. Right? Go to services, day trading services. Okay. And right here is my book. Okay, guys, and just hit purchase. It's going to send me a notification, and then I'll give you the instructions. Basically, I don't have like the payment set up right now on my website. So my website's pretty new, but I basically take payments through PayPal and Venmo. Okay. So here you go. All right, guys. And yes, guys, I'm a CPA, CA. I worked in the business for close to 10 years, and I'm not tweeting from my grandmother's basement. All right. This is the real deal. I'm showing you guys what professionals do, what we do in the real industry, guys. Okay. All right. So let me know if those fibs make sense before we go on to day trading on SPY, because I want to make sure you guys have a good understanding of this. Okay. So we had the first leg, traded to extension. We had the second leg. This is called the sequencing leg. Okay. So until one of these swing lows break, then we're just continuing in Fibonacci patterns. What chart do you usually take your decision from, SPY or MES? Both. I'm always looking at both charts. Always. Always. SPY is helps me a lot with when I'm just looking at the gaps, right? SPY helps me a lot when I'm looking at the gaps. But for general decision making, I'm always looking at both. So the more evidence that I have, the better I am at making a trade. Okay. So if you guys have any questions on that, please post them here and we will discuss in more detail. But let's look at SPY today and let's talk about the points that I gave today and how everyone was able to make a few bucks. Okay. So we'll go to SPY now. Okay. All right. So I want to make this interactive. Okay. So I need you guys to comment. Okay. Because I want to see where you guys are stuck. Yeah. Snake Trader. Today I noticed some inside bars don't match. Correct. Sometimes the inside bars on futures versus SPY are different. For me, I always base my inside bar decisions from SPY. Always. Because SPY is the most highly traded ETF in the world. So I always start off with SPY for inside bar specifically. But when I'm looking at fibs and stuff, I will incorporate futures because futures will have overnight. And overnight will also give us some clues. Okay. So let's start off with SPY today. And let's draw the previous day's high, which is right here. And let's draw the previous day's low. And the first question that I want to ask you guys, what are we doing? Are we gapping up? Are we gapping down? Or are we opening within the previous day's range? Okay. And there's also a question from Hangry over here, and I'm going to get to that. I'm not going to forget. I'm going to make sure. So if I do forget that, please let me know, guys, before we finish up today. But I'm going to make sure to get to that. So the first question of the day, guys, is, okay, so here is the previous day's action. What are we doing today at the open? Are we gapping down? We gapping up? We opening inside? So Chris says we're gapping down. Joe says we're gapping down, which is absolutely correct. Okay. So when we gap down, guys, who do you think is going to be trapped at the open on this day? Who do you think is going to be trapped when we gap down? Who's losing money when we gap down? Who's sad? That is the important question that you need to ask yourself when you look at a chart from a day trading perspective. You always need to ask yourself, who is in trouble, right? So when we look at this chart, guys, the bulls are obviously in trouble, okay? Because we're gapping down. So let me ask you a question. If you bought options on SPY right here, or if you bought shares, or if you bought futures, when we gap down, you're going to be sad. You're going to be losing money, correct? So this is why. So if I go back to the Telegram, right? So the first thing that I started off today was with the opening range breakout, okay? Because I wanted to take the break of this first 5-minute bar to see if it can get a flush, okay? So if we look at this, okay, we got a tiny flush and then we reversed. So basically for the opening range breakout today, there was a small loser. There's pretty much nothing you could do, but you'll see later in the day, we make back our money. And this is the concept, guys, of having, basically what I say is you have 1 to 3 bullets a day, or 1 to 3 pitches a day, or shots a day. When you're day trading, you can't only take one trade, because if you're taking multiple trades which all have greater than 50% win rate, then you're likely to win at least one of them, right? And when we win, we're trying to win double or triple. So if we take 3 trades and we win triple on one and lose small on the other 2, we're still going to make money. So this is the concept that I came up with. Okay, well, when we trade, let's have 3 strikes and you're out. Okay, so the first trade is an opening range breakout. That's 1 strike. Okay, so that's a loser there. So, okay, so the opening range breakout fails. That doesn't work. That's totally fine. We're not going to give up. So what's the next strategy here? Okay, so one thing that you guys know that I like doing is something called the gap fill. Okay, so the gap fill is a very old school strategy, and it has not changed. It's very effective, right? So in the Telegram, what I did is I drew the Fibonacci, okay, from the previous day's closing bars low down to the first 5-minute right here, okay, down to this pivot right when we start pulling back. The reason I'm trying to do this is I'm trying to find areas on the gap where we can find resistance. Okay, I'm trying to find areas in the gap where we can find resistance. And generally what I find is that, there's going to be resistance when we pull into the gap. because the gap in itself means that there's power in one direction, right? So what were the setups here? So if you're using a candlestick approach, right, if you want to short the candlesticks, look at these candlesticks that we had. We had a nice doji right here on the 50%, which produced a nice scalp down, right? And then we had another inverted hammer. Look at this inverted hammer with a long wick to the top that also produced a nice push down. So right there, that's you hit that, make some good money, okay? And even if you miss those, look at this nice inside bar that's looking at you. Look at this beautiful inside bar. You take that down, could make double your money right there. And then this last inside bar right here, if you had taken this up, you could have made some good money as well, right? So very, very good setups in the open. But the main thing is I don't like to be a part of the Fed announcements unless I'm already in a position and I'm already profitable on the position. So like if you took this inside bar and you scaled out something and you had your stop, let's say at the low of the day, and you want to keep it there, then you can play the announcement. But you already have to have locked in a little bit of profit. Never play the announcement like just, okay, I'm just going to get in the announcement now. Never do that. Always, if you're going to play the announcement, you already should be in a position and already have locked in some profits. Because if it goes against you, which it can and which it likely will go against you, then you need to be protected. Okay, guys? And then just to show some more of the price action, look at during the Fed announcement, look what we have. Nice inside bar. Just take this break up for a quick scalp, guys. You have to be willing to scalp in this market. You have to be willing to take profit. You just take this scalp right here, boom. That's easy 1-to-1 right here. You risk 1,000, you make 1,000 right there, right? So let's just summarize. We take the orb, it's a loser. That's fine. We come up to the 50. We get these inverted hammers right here and a doji. We take that down for easy 1 times your money on each one or more, right? So let's take out the measuring tool, okay? So let's take that inverted hammer right there. Say we put a stop on the high. Look at this, guys. Look at this. That's 3 times your money, okay? So let's discuss this. If we make 3 times our money on this hammer and we lost 1 times on this one and we lost, and let's just say we did flat on this one. Let's just say, I'm just giving worst case scenario, okay? We lose 1,000 on the orb. We go flat on this, this push down because it came back up, okay? But on the third one, we hit it for 3 times and we make $3,000. Are we going to finish profitable or negative on the day? That's my question. What do you guys think? Are we going to finish profitable or negative on the day? Okay, so those were the 3 trades that I called out in the Telegram in the morning. Those are the 3 trades. So if we lose one, we scratch on the other one, and then we make 3 times on the last one. Are we going to finish with profit or are we going to finish with negative on the day? What do you guys think? And in the meantime, I'm going to start pulling up some other of the stocks. So Joe says made money. Daniel says positive. Exactly. So this is what it comes down to, guys. Okay. You don't need to win every single trade. Okay. You don't need to win every single trade. Let's get that straight. You do not need to win every single trade. You don't even need to be above 50%. You don't. You need to have one magic thing. Risk to reward. Your average winner must be greater than your average loser. So what I need you to do, and what I'm telling you to do from a friend to a friend, and what I have done with all of the traders that come through my apprentice program, is documenting your trades in a journal. Okay? And I need to see, what is your average winner? What is it? Is it double? Is it 1.5? Is it 3 times? And what is your loser size? I need to see those. And then when you have those trades documented, you get a better picture of what you're doing right or what you're doing wrong. Okay? But if you don't have the data, you cannot make informed decisions. You will only make emotional decisions in trading. And in trading, we must make decisions based on data. Okay? When the algorithms are trading, everything is driven on data. That's how they make money. So if we want to make money, we must trade on data as well. So let's go to the book. Let's go to my Fibonacci book and let's read the risk to reward table. Okay. So I just showed you guys how we could have made 3 times our money on the 50% inverted hammer short. So you guys tell me now, if we made 3 times our money, in that trade, how many trades do we need to win a year if we take those same setups? How many trades out of 100 do we need to win to make money every year? What's the answer? If we're getting about 3 times our loser, how many trades do we need to actually do? How many trades do we need to win? 26. Okay? That's it, guys. That's all I'm asking you to do. Can you win 26 out of 100 trades? If you think you can win 26 out of 100 trades, let me know in the chat. This is the power of data. If you don't have the end goal in your mind, then how can you achieve the goal? If you don't understand the numbers, then how can you achieve the goal? Right? Can you guys win 26 out of 100? Margot says yes. All right? I know you guys can do it. I know you guys can. The problem is most people don't have the information, and I'm giving it to you right here. Okay? So this is the trick of the game. If you tell someone that's not educated and understand the probabilities of trading, if you tell them, hey man, I took 3 trades and I won 1, they're probably going to think you lost money. They're going to probably think you're a bad trader. They're going to probably think you don't know what the hell you're doing. But the biggest secret in trading is risk to reward. That's why I wrote a whole chapter about it in my book. Risk to reward is the most important thing, and I need you guys to focus on that. Okay? And now let's talk about the psychology. I want to ask you guys an honest question. After you took this short on the opening range breakout and you lost, would you have had the courage to short again? This is a serious question. I want to see the psychology. If you took the opening range breakout and you lost, would you have the courage to short again on the gap fill? Would you have the courage? Tom says yes. Be honest with me, guys. How many of you would have the courage? You just took a short, you lost it, all right? And then now I'm saying you got to short again in the gap fill. Would you have done that? Got a few yeses. Pratam says no. Right? And I'm expecting to see mixed reactions on this. Ricardo says, I didn't when I started, but I did today. Excellent. Yes, it would be a revenge trade though. Yes, need to have short memory, not initially, but through successful repetition, yes. Yes, now that you changed the way I've seen the market. These are great comments. Okay? So let me explain to you guys something. Everything that I'm showing you, these setups, opening range breakout, gap fill, etc., they have data behind them. Okay? So they have at least a 50% success rate. Okay? So now let me rephrase this question. Okay? If I told you you have a coin and you're flipping it 3 times, but if you get tails, I'm going to give you $3. If you get heads, you're going to lose $1. Would you do it then? Would you take the trades then? If I told you you're flipping a coin instead? Pretend you don't see the chart. Pretend you don't see anything. All I'm saying is we're gonna flip a coin together, me and you. We're gonna flip it 3 times. If you get it right 1 time, if you get tails 1 time, I'm gonna give you $3. And if you get heads, you're only gonna lose $1. See, guys, this is trading psychology. This is what I'm talking about. You have to understand the strategies that you take. What is the probability? What is the risk to reward? Okay? These are the questions you need to ask yourself when you're taking these trades, because then you can translate it into emotionless type of trading. This is what we're trying to accomplish. We are trying to trade without emotions. This is why robots will outperform humans, because they don't care. They have built-in probabilities, and I want you to have those built-in probabilities as well. Every setup that I take, every single setup that I take, I have the data that supports. I have hundreds of samples that supports what I do. What is the win rate? I know what is the win rate. I know what is the average winner, the loser. I know what's the drawdown. I know what's the winning streak and the losing streak. How many of you in here, when you take trades, you can tell me what that data is? Whatever you trade, whatever you take, whatever setup you take, I don't care what it is. Can you tell me what the data is behind that? How many people in this chat? Jeff is saying, please add me to your Telegram. Guys, for the Telegram, I can't add you to it. You have to actually click on the link. It won't let me add people. So I'll show you guys how to do that. All right. I'll show you guys today how to get in there. So Snakes Trader says, not yet, but will improve. Okay. If you cannot tell me what the percentage win rate is behind your trade, what the average winner and average loser is, if you can't tell me that, then you shouldn't be trading. Okay? I'm going to tell you guys straight up. I'm not here to sell you on some kind of bullshit indicator. It doesn't exist. No indicator in itself works alone in a silo. None. I've been trading a long time. None of the professionals that I know use this moving average crossing over this, blah, blah, blah. None of that bullshit. Okay? None of that. So, friends, I'm asking you to please do the back testing. Do the back testing. Spend 30 minutes a day for the setup that you want to trade and back test it. Do 10 or 15 samples every single day, and then document in your back test. Document in your back test what's the win rate, what's all of this stuff. Document it. Okay? And let me show you guys what I do. So this is my triangle system. Okay? You see every one of these Excel files has my back test in there. From 2018, 19, 2020, I have my back test here. I put in the work. Okay? And you need to also, if you want to make money in this game, it doesn't come that easy. But once you do it, here's the best thing about trading. When you commit that time and you get good at it, it's the same thing every single day. It doesn't change. The setup is a setup. It's not going to change. Sometimes there's going to be little changes in like your profit target and your stop loss, little adjustments, but the setup is the setup. The 50% Fibonacci gap fill short has been working since charts existed. You see what I mean, guys? But that in itself is not going to make you money, because you still have to have what is going to be your target, what is going to be your stop loss. You need to still have those things. If you don't have those things, so for example, let me tell you guys what some traders do. Okay, I had a few traders that actually did this. Okay, so you see how we can make 3 times. Some traders do this. When it gets to half, like right here, 0.5 reward, they're out. Because you know why? Because they're too scared to hold it. They're too emotional. So let me ask you guys a question. If your risk to reward is inverted, so that means that you're making less than your average loser, are you going to make money? What do you guys think? Are you going to make money? If your risk to reward is inverted, so you're risking $100 and you're only making $50, are you going to make money? And I want to tell you guys a secret about that. If you're following someone, if you're paying for something, whatever, and they're selling you accuracy, like 70%, 80% accuracy. Yes, you can. I can be basically 100% accurate if I do shit like this. If I teach you guys the wrong way, if I say, oh, you just get 1 or 2 points and you're out. but you're risking 5 points. You're risking 10 points. You will lose. I actually had a trader that told me she paid for service. They make 2 points on the winners and they lose 5 points on the losers. So she told me, so same situation. We take 3 trades. She won 2 of them and she lost the 3rd one. And then she lost basically all the profit she makes. This is the sign of bullshit. Okay? So stay away from that, guys. Don't trade with the inverted risk to reward because it's not going to work. It's not going to work. Some of the big time professional traders that I trade with, like what they do, guys, is when they catch a runner, when they catch something, like for example, let's say they get the low of the week. Okay? Let's say they get the low of the week. When they get that runner, that's going to pay 5 or 10 times their risk. 5 or 10 times. So when you take one trade and you win, like, okay, if you take one trade and you win 10 times your money on one trade, you can lose. How many can you lose after that? How many can you lose if you take one trade and you make 10? How many trades can you lose after that? What do you guys think? So we took one trade. Let's say we made $10,000 and we're risking $1,000 per trade. Okay, so we took one trade, we made 10. So you can lose 9. That's a good deal. That's a good deal, man. Ricardo says it's an emotional honeypot. Many wins feels great, and then one lose comes in, and you think just win many more, but now you've lost again. Exactly. All right. So what are the principles we discussed today? We discussed that we must have good trading psychology, and we can get trading psychology through understanding our setups. If we understand what the win rate and the average winner and loser is in the setup, if we can understand that, our psychology will be good. This is how I broke through having like doubt and fear in the market. Is I did backtesting, and through thousands of hours of backtesting, I built confidence. And then when I had confidence, when I see the trades, I understand that even if I lose the opening range breakout, I can try again here and I still have a good chance to make money. See? I'm not saying it's going to work all the time. Nothing works all the time, but I have a good chance. So now we understand to build trading psychology, we must do backtesting. We must earn chart time. We must practice. Then we can get through our fears and we can get through the mental game in trading. Okay. The second thing we learned was trading psychology, risk management. Okay. If we take 3 trades, 2 of them are losers, and the 3rd one we make 3 times our money, we're going to walk away with profit. Okay. So these are the basic concepts that I need you guys to apply. Do not get emotional trading. Do not look at trading as an emotional game. Don't think that your emotions have anything to do with the trade. It doesn't. You can be happy. You can be sad. The market is going to do what it wants to do, and it always will do what it wants to do. It does not care about how you feel. So there's no point in getting emotional. All right. Am I too harsh on this, guys? Do you want me to sugarcoat it more? Tell me. If I'm too rough, like sometimes I'm a little bit aggressive, but I want to tell you guys the truth, and sometimes the truth hurts. So what do you guys think? Is this good? You're learning? It's good from Snake Trader. I'm sorry if I sound a little bit tough on you guys, but I don't want you guys to lose your money, man. I honestly don't. I really don't. You know how much people have called me and like DM me and said, hey, I lost 100 grand, 150 grand. I lost 200 grand and I lost my marriage. I don't want you guys to go through that. I don't want you guys to have to go through that. You see, like this trading game, people think it's just, trading stocks or options or whatever. It's more than that. It's your life. It's because if you put your life savings in this game and you lose it all, you can lose more than your money. You can lose your family. You can lose your wife, your husband. And guess what? You're going to lose your health too. There's been many nights that when I was new to trading, that I stayed up and I couldn't sleep because I didn't know what I was doing and I was so emotional and so distraught. There's many times where I would be sleeping and waking up at 5 in the morning randomly to check the futures market. I'm sure some of you guys are doing that right now. I'm sure some of you guys are. Okay? So let's follow the right principles and let's follow correct strategies so that we don't have to go through those type of experiences in life. We want to trade in the market to bring an extra source of income and to enrich our lives, not to take away from that. Okay? So SPY, really good, guys. Really, really good. Let's just say, for example, you don't want to look at any fibs and you just want to trade the inside bars. Okay? So let's just say, hey, I do not want to trade any fibs. I don't really understand the fibs, but I do understand the inside bars. So let me trade the inside bars. So let's discuss the inside bars. Okay? So we have this inside bar here, right? So all we have to do, guys, if you want to keep it brain dead simple, just take the breakout of the candle. Short right here, stop on the high. Okay? That's easily 2 times your money, a little bit more, 2.3. Right? What about this one? Okay, so we have this one. What about this one? Let's try this one. See what we can get on this one. Another 2 times. Isn't that amazing? To me, that's amazing. Okay, so if you risk 1,000 here, you make 2,000 here. You risk 1,000 here, you make another 2,000. You walk away with $4,000. Let's go to the table now and let's see if we did good work. Where's the table? Let's go to the table and let's see if we did good work. So we're in this bucket. So we did 2. Okay, we did 2. We made 2. So if we made 2 times, we only need to win 34 out of 100. And you're well on your way because you already won 2. So you only need to win 32 trades out of your next 98 trades. You can do it, guys. You can do it. Okay? So there you go. So there's the inside bar style. There's the fib style. You know, it's all there. So the inside bar, do you execute on SPY or MES? You can do both. Any one is fine. If you're trading futures, then you need to be very careful about the margin and stuff like that. Enzo says, this is the first video I'm seeing of you and want to thank you indeed. No, you're not harsh. It's fact. Thank you very much, Enzo. How to place your entry point and your target and how to know what the target is. Okay. So good question. So let's just keep it very simple. Okay, guys? Let's keep it absolutely simple. Okay. So we have an inside bar here. We have an inside bar here. Okay. So this is what we're going to do. We're going to short when it breaks the low like that. We're going to put a stop loss right on the high of the bar like that. That's it. Okay. Just like that. Okay. So if we double click on this thing, it's going to tell us exactly what the numbers are. So it's saying here, you're going to short at 394.21 and you're going to put a stop at 394.62. Keep it very simple. Okay. And all you have to do, guys, is you have to figure out what's your style for scaling up. Okay. There's no right answer because all of the methods work over time. You could say, I'm going to always be out at 1.5, for example. Or you can say, I'm always going to be out at 2 times. Or you can say, okay, I'm going to take a little bit off at 1. I'm going to take a little bit off at 1.5. I'm going to take a little bit off at 1.75. I'm going to take a little bit off at 2. All of those work. It depends on you. What are you comfortable with? If you don't have the time, then what you want to do is you want to put one target and leave it. So you keep your stop loss, you keep your target, and then you disappear. Okay? So how to set the target? The target is always in relationship to your stop loss. You always have to make at least 1-to-1 on your trade. If you're risking $1, you need to at least make $1 or it's not worth it. So that's how you determine the target. Don't be complicated. Don't get fancy. Do not get fancy. This, okay, if you guys, this is how you can get fancy. This low, what is this low? Who knows what that low is? I'll tell you exactly what that low is. This low is the 786 on the hourly chart that we just looked at. So let me pull it up. So if you want to analyze everything, okay, go to the hourly. See this low, you see this right here is this on the 5-minute chart. This low is this on the 5-minute chart. So I could tell you, okay, you could just trade it to the fib target on the hourly. That's perfectly fine also. But here's the trick. When you're up at least 1 times your money, so if you risk 1,000 and you're above $1,000 in profit, you need to start scaling out and protecting, or you need to have a target. Do not let, remember this, do not let a winning trade come back on you and become a stop loss, become stop out. Never let that happen. If you've made more than 1 times on your trade, you have to protect, move your stop loss, do something. Don't let a winning trade come back and become a loser. That is one of my golden rules. L North, how did you know when to sell? Did you have your target in advance? So like I said, how do you know when to sell? You have different profit targets. In my book about the fibs, I show how you can use the Fibonacci extensions, for example. But generally, all you want to do is just remember this. If you're risking 1,000, when you get above 1,000 in profit, then you want to start scaling out. You want to have a target. You want to have that set. So what I need you to do, is I need you to write down in your trading plan what method you're going to use. Which method are you comfortable with? You tell me. Okay? Because all of them work. But the question is, what can you execute? There's no point of me telling you to take your target on the hourly Fibonacci if you don't know how to draw it. Right? There's no point on me telling you to take it at a scaling method if you're not at the computer and you can't do that. Okay? So you have to figure out what's going to work for you. Okay? And I have a full video on YouTube called How to Take Profits. Okay? So you can check that one out too. That has a lot of good information. Are you trading SPY shares or option or the actual futures contracts? For me, I'm trading the actual futures contracts, MES. But my analysis will always come from SPY first, because SPY is the leading indicator for me, because it is, so SPY and futures, and they're all based on the S&P 500. But I like looking at SPY because all traders look at SPY. So it lets me understand what the traders are going through. Okay. Okay, guys. So let's talk about some other day trades, and let's talk about some other fun stuff. And let's talk about some of the swing trades. Okay. So let's move on to swing trades. And then I'm going to come back and I'm going to look at some other day trading setups with you guys. Okay. So I want to talk to you guys about MU, and I want to discuss a few things. How to join your future trading room. Thanks. So Prabjot, I don't have a futures trading room. I just have a swing trading room. For the futures, in my private swing trading room, we talk about futures every morning, but I don't give signals or anything like that. I discuss futures on Telegram, but right now I'm not doing any signal servicing for day trading because of the fact that my time is limited. My time is limited and I'm going to be traveling soon. So I don't want to start a day trading room and I'm not going to be there because I'm mostly doing swings. The swings are very easy for me to do because I can post it on Friday night. Everybody has the setups and we just execute it throughout the week. And I'm going to show you guys MU. This is what we did this week. Okay. So I just want to make it clear, guys, if you join the private swing trading room, those are for swing trades. Okay. So let me show you the swing trades. So let me pull up this here. These are all the swing trades that I've taken in March so far. Okay, so far we've had 6 winners and 1 loser. UPS was the only loser. Okay, so this is another strategy that I have because what I like to do is diversify my risk. Because if I trade futures, day trading, and then I swing trade stocks, I'm actually diversifying myself. Does that make sense? Because I'm not putting all of my risk into one thing. I'm putting my risk in multiple baskets. Because if the futures is not working out today, well, my swing trades are going to be working out. If the swing trades are not working out, the futures, this is called diversification. This is how you trade as a professional. You don't want to put all your eggs in one basket. Okay. So these are the swing trades for March. 6 winners, 1 loser so far. It's been very good. And I want to talk to you guys about MU. And I want to talk to you guys about some of these concepts. Casey, I'll have to finish watching later, Rich. Thanks for what you're doing mentioned earlier. The short period helped me get closer to that light bulb, I think. Thank you very much, Casey. Thank you. It's my pleasure. Okay, so let's go to the weekly chart here. So I will say this, MU, I've made the most MU. I made the most money on MU this year than any other symbol out there. I've made the most money on MU. Okay. MU has paid me the most this year. So let us talk about the analysis. Let me discuss why I've been making so much money on MU. I really, really love MU, man. This thing has, even though tech has been kind of slowing down, MU has been holding strong, and I've made a lot of money on MU, and I'm going to talk to you guys about it now, okay? So the first thing that we had in MU, we just scroll back out here. We can see that we've been in a very bullish uptrend, and we can see basically right here near the end of 2020, we had a clean breakout of all-time highs. So if we come back down here, right, we had this all-time high right there. You see how we had a clean breakout of all-time highs. Clean breakout, okay? So what I did is, you see these inside bars here, guys? So this was 1, 2, 3, 4 inside bars in a row. Every single one of those inside bars, I made money. Every single one. And that's why I love MU. I love it so much. I absolutely love it. Okay, so every single one of these inside bars on MU on the weekly chart, I took these up and I made money. And I'm still holding a little bit of my swings from back here. So you guys can imagine how much I'm up now that it's all the way up here. Okay, so let me talk about the trade setup that I did. Okay, so let's go to the 15-minute chart. Okay, so I want to talk about something. This is also called the gap fill. It's very similar to what we talked about earlier today. So you see this line here? This was my entry price on MU. Okay, so my entry price was $90.26. My stop loss was $87.10. So if you notice here, guys, on the 16th of March, we gapped up above my entry and I didn't get filled. I did not get filled. And all of this happened. All of this happened. It went all the way up here. And guess what, guys? I did not have FOMO at all. I didn't care. I had no FOMO. Many of you would have FOMO. Many of you would start chasing. I waited patiently. MU came all the way back down to my entry price right here. It filled me on this wick right here. It filled me, and then it hit my target today. Can you imagine that? Let me ask you guys an honest question. How many of you would have chased MU when it started running up? Would you have chased it and said, man, it's going to the moon? Would you have jumped in it? Be honest with me. How many of you would have the discipline to wait for MU to come all the way back to your entry price? This is one of the biggest issues that traders face. If they miss a trade, if they miss a fill, they get FOMO. And when you get FOMO, you chase. But what would have happened if I got in over here instead? My risk to reward would have been bad. It would have been horrible, right? So I waited for MU to come all the way back down to my entry. All right? So be honest with me, guys. How many of you would have chased MU when it started pushing up like that? And then what I also wanted to show, guys, was the reason I was so confident waiting here was because I knew if we came back down that we had this previous support here. So these resistance, you see this double top here on MU? Now I knew that this area could act as support, and this was lined up with my order. So I was comfortable. If it came back down, it's fine. I'm going to get filled on a good price. Ward says, yes, FOMO, right? A lot of us suffer from that, guys. So let me tell you one of the ways that I deal with FOMO, right? So if I am taking 6 or 7 swing trades, okay? If I'm taking 6 or 7 swing trades and I'm taking some day trades in futures, it really helps with the FOMO, right? Because what it allows you to do is if something doesn't work or if you miss something, you just go to the next thing. So this is also another benefit of diversifying yourself. If you're doing swing trading and day trading, well, if you miss something, then you won't have FOMO because you can just move on to the next thing, right? So this is one of the tools that I use to help me deal with FOMO. I can deal with FOMO well because I have multiple trades happening. So even if I miss one, I still know I have chances on the other ones. You know what I mean, guys? So I'm always thinking about it like flipping coins, right? So if I'm flipping coins, then I just got to go to the next coin. That's all I got to do. I got to go to the next coin. Okay. So let me know if you guys have any questions about MU. And if you have any questions about that, I'll be happy to answer. The next one that I want to look at is eBay. This was another winner. And then we're going to look at the stock setup, like the day trading from today, how that went. Okay. So we're going to go to the weekly. Okay. So let us discuss eBay. Okay. So eBay, we had this big bullish breakout here. And then what I noticed on eBay was that we had this this flag, right? We had this flag. Then we broke out. Then we came back down and actually retested the flag. So you see this? We retested the flag. And then we put in an inside week. So all I did, guys, is I took this inside week up on eBay because I understood that it was a bullish pattern. And we already hit first targets on eBay. So that was like one of the easiest trades. That's it. Nothing else to talk about with that. Very simple. Just like this is a simple price action pattern, right? We had this flag, we had the breakout and the retest. You see, like if you look on a 5-minute chart, you'll see a lot of these, right? So very, very simple. All right. So those are my swing trades that did well, MU and eBay. And like I said, I lost on UPS. Let's just look at UPS. Let me show you guys some losers. Okay, here's UPS. This is the only one I've lost so far this month. So if you look at this UPS, let me bring this thing over here. Okay, so if you look at UPS, let me get rid of some of the fibs. You see here, this was my entry. Look at what it did. It came, it filled me, and then it just turned around and stopped me out. So there's nothing I could do, right? And that's going to happen a lot to you in trading. So I want to show you, even I take losers. I take losers. It's not always going to be good. Okay. Jack and Jill double top. Yeah, that's a nice double top right there. Beautiful. Like that. Okay. So what we're going to do now is we're going to go through a power rundown of the stocks from the top picks yesterday. And we're going to talk about all the day trading opportunities. And I'm going to get you guys to identify the patterns, to identify the gaps so that you can get some learning from this. Okay, so let's go back. So these are the picks for today, but let's go from the picks from yesterday and let's talk. So I know that the airlines did really well today. Okay, lately I've been very focused in the futures. I haven't really been taking any of the stock plays, but they've still been working very, very well. So if you guys prefer to trade the stocks, then just do what we're talking about right here. Okay, so we're going to start off with AAL, okay, American Airlines. All right, so here is AAL. This is the price action for the day, okay? So can anyone identify what are the valid setups for AAL? So what happened with AAL, it actually opened on a gap down, okay? Because we can see the previous day's low is right around here, and we opened on a gap down. So I want you guys to help me out, help me to find the setups on the day. What are the valid setups? So I see about 4 setups here just from looking that are good setups. So help me list out the 4 setups and then we're going to break it down together. Okay. So that's American Airlines. While you guys are helping me find the setups, I'm going to put on some more setups and I'm also going to talk about Hangry's question. I'm not going to forget his question. Okay. So Viacom. Okay, here's Viacom. The hell is this bullshit? Okay, that's Viacom. That's pretty interesting. Macy. Do Macy right here. So what do you guys think the setups are, guys, for American Airlines? Let me know, guys. Let me know. Macy's, and then we're gonna do, let me just pick one more. Let's do MasterCard. I really hate how there's a delay on YouTube. I don't know if it's just the thing that I'm using, but when I ask the questions, like by the time it gets to you guys, it feels like it's like 5 minutes later. Okay, so we're starting with American Airlines, and Daniel says we have the 50-minute opening range breakout. We have the inside bar, tweezer top, and the hammer bottom. Okay, so all right, guys, feel free to throw it in there. Throw it in there. Or what else? I need to see more. I want you guys to tell me, because when I'm not there holding your hand when you're day trading. So I need you to tell me what you're gonna do, and I'm gonna help you. Okay. So let's start with the opening range breakout. So here we have the 5-minute chart. Blues Rock Addict. Could you talk about what role do Bollinger Bands play in your strategy? Bollinger Bands do not play any role in my strategy for day trading. Bollinger Bands I use on the higher time frames for looking at swing trades and investment strategies. I do not use the Bollinger Band for anything on a 5-minute chart. But I don't take it off because I still use it for my other plays, right? But I don't use it from a day trading perspective. At one point, when I first started trading, I thought Bollinger Bands was the holy grail, and I used to like just play Bollinger Bands. And it's not a profitable strategy on its own. It needs to be combined with other factors. Okay. So, okay, let's just say we took the opening range breakout on American Airlines. So we're just going to get long above the high. We're going to put a stop down there, and then that's it. You hold it into you don't hit basically 1-to-1 until the end of the day, but you still make money. Still a great trade. Nothing wrong with that. Absolutely nothing wrong with that trade. Opening range. So you're there at 9:35. You get in long above the high. The stop is down there, and you take this to the close. You make 1 times your money. You risk $1,000. You made $1,000. That's good, guys. That's perfect. We don't need more than that. If we can do that every single day, where would we be at the end of the year? Right? So that is the first setup. Okay. And then the next setup, what we see here is we have 2 inside bars. Okay. We have this inside bar, which basically just gave you close to 1-to-1, not too much. See what we can get off of this inside bar. See if we can get to 1. There you go. So 1-to-1, right? So still pretty good. And then we have this one, this nice one here. So this one, if you just take the breakout of the bar, that's a nice short down there. Okay. So that's nice. That's a 3 times. That's a big one, right? So very, very good. That's very, very clean. So let's just say you just took an orb, you took this inside bar, you took this inside bar, you're done for the day. You're good to go. Okay. And then the last play is the Fibonacci. Take it from this low to the high, right? And we have this right around. So when we start coming down into the 618, you're looking for some type of confirmation candle. Here's your confirmation candle. Here's your doji, right? You have your green doji right here. So this is your signal. And if you notice here, guys, this is a very important concept. This is called the waterfall. Did you notice none of the highs of these bars break until we get here? So this, my friends, is what we call the waterfall. So what you can be doing when you're down here, you're looking for the break of the high to confirm that the momentum has changed. So you're trying to get in here, here, nothing. It doesn't break the high, but it breaks the high down here. And then you have a beautiful, beautiful, beautiful winner. So if we just take that high like that, put a stop down here. Look at that. Beautiful. That's a huge winner. That's a huge one. Like that's $9,000 right there. If you're able to take that into the close. Very, very, very good. So that's American Airlines. Really, really good setup. So are we good on American Airlines there? I'm going to move on to Viacom, Macy's, and MasterCard. Okay. So if you guys at any point you're having any questions, just throw them in the chat. Let me read what Hangry's question was. I'm going to be listening in while I drive. Can I ask questions here to be answered in the stream? How to determine breakout price on the double inside candle. 2, how to know when to sell when the double inside squeeze starts to move. Okay, so Hangry, what you need to do here is you need to go to Scanner Wars right here. Okay, you need to go to Scanner Wars, and then you need to go into my pinned tweet, which is here, and you need to review these trading strategies. So this is exactly what I'm talking about. When you have the signal on the daily chart, you need to go into these strategies here, and you have to use these strategies to execute the day trade. Okay, you have to use these strategies to execute the day trade. So Hangry, what you need to do is you need to first, when you get the double inside confirmation on the daily chart, you need to go to the 5-minute chart and execute the trade using the strategies. Okay. Or what you can do, if you just don't want to trade the 5-minute chart, you can just take the breakout of the high of the double inside bar on the daily and put a stop on the other side. That's the other simple way. What do you mean by break on the high of the waterfall? So what I mean by that is, okay, so if you, when we're coming lower, so when you're, let's say, so the waterfall strategy is you only want to get in when the high of the bar breaks. Okay. So notice that none of these highs break. No, so the next candle doesn't break the high. The next candle doesn't break this high. The next candle doesn't break this high. The next candle doesn't break the high. The next candle doesn't break, all the way until down here. Then finally, the next candle breaks the high. So now we have a confirmation that the momentum has shifted because now the bulls are pushing through highs. Because if you're short over here, so let's say you shorted here, you could be trailing your stop loss at the high of all these bars. The high, you're trailing your stop, trailing, all the way down. And then when you get stopped out here, now we reverse. So this is what I mean. Try to get away. When you're scanning inside days, what is the criteria you're looking at? What distinguishes 5 to 10 tickers? Well, the 5 to 10 tickers that I pick comes from my experience in day trading stocks. I know the tickers that move well. I know the tickers that have the ability to be good day trades. And I also look at the daily charts. Okay. Ricardo says, thanks. I get it now. Thanks, Ricardo. L North, Rich, I watched all 5 videos yesterday. Video 4 said you go into what to press in broker for orders. Where is that video? What do you mean, for the fibs, or what strategy was that one about? And then we'll look at Viacom here, okay? So let's look at Viacom. So I know that some of you are running out of time here. It's been over an hour, so I'm just going to do these quickly, okay? So here's Viacom. We can see that it's gapping down near the previous day's low. First setup right here is the opening range breakout. Take this bad boy down. Absolutely stunning, simple, easy trade. Make your money right there, 3.5 times. Then we have the inside bar here. Take this inside bar short. Look at that, beautiful, another, let's see what we get here. Another 4-5R, absolutely stunning. So you can walk away here with easy $7,000. Let's go to Macy's now. What happened in Macy's? Well, Macy's looks like it wasn't as simple. Okay, we had this inside bar. This one was a stop out. So we broke to the high. We came back down a stop out. So that inside bar didn't work. But that's pretty much it. That's pretty much all there is there for Macy's. There's that inside bar. I don't see really any other setups. The opening range breakout, it didn't break it until like the 4th candle. So by time that order is already dead. There's if your opening range breakout doesn't fill in 2 or 3 candles, there's no point on holding it, because then you have a different pattern, right? So that's not going to work. So pretty much nothing really. If you took Macy's, if you get inside bar, you lost. Here's MasterCard. Okay. So here is the 930 bar right here. What do we have? Beautiful inside bar right off the bat. That's a big money right there. So just take that one long there. Easy 3 times your money right there. All right. So that's how you, and then up here, guys, let's say you get this inside bar here. You see this inverted hammer inside bar. If you got that short, that would have been awesome. Take that short like that. Look at that. Beautiful. Okay. So there we go, guys. So I went through a few of the stocks there. And we talked about a few of the setups. So check out Scanner Wars and review the setups, guys. And that's pretty much it, guys. Remember the basic principles, what I described today. The principles are trading psychology and risk reward. So that's the lesson for today, and just focus on those and focus on getting better. And if you don't have the data behind your trades, then start documenting it, like start doing back testing and start keeping your data, so then you can know, what's your win rate, what's your risk to reward. Start doing those little practices, and that's going to go a very, very long way. All right. So just invest a little bit of time into this every day. Even you could do like 20 or 30 minutes of back testing at the end of the week, at the end of the month. That's going to be a lot of time that you put in, and you're going to see the results from that. All right. So otherwise than that, that's it for me. Thank you, Joel. Thanks everyone for being here. And if you have any more questions, feel free to DM me, and we can discuss more on a one-on-one basis. Okay, guys? Have a great night.